we have a question that's coming on email now. Trevor has written in and he says that he sold his house in Jabalpur for 2.5 crore rupees. Now the house was registered in Trevor's name. Now he says he's liable to pay long-term capital gains tax of approximately 1 crore as per current rules on this property sale. However, in order to save on this capital gains tax, he's planning to buy another house in Secunderabad for approximately 1 crore rupees, the same amount which is a capital gains that he's tax that he's paying. Now he's planning to buy this property jointly with his wife. Is that permissible? Also, he wants to know whether he will then be entitled to capital gains tax exemption. Is it mandatory for him to buy the new property in his name only? So can I sell property and reinvest in a jointly owned property and still gain capital gains exemption? Is that possible?
Yes, it is possible. So here, Mr. Trevor, first of all, even if the property is jointly owned, as long as you are also the owner of the property along with your spouse, but the beneficial ownership should belong to you. So in the tax returns, what they normally go by is the beneficial ownership and not the legal ownership. So even though your spouse may be the joint owner with you for legal purposes, as long as the entire investment is made by you and the entire asset, assuming if it is more than 50 lakhs, it has to be reflected in the schedule asset and liabilities now in your tax return. So
Suresh, what you're trying to say is, does this mean that Trevor has to establish a paper trail?
It would
showing that the money is going from his account to the towards investment in that property?
Yes, I mean that would be definitely advisable, and otherwise it can result into litigation, that whether he intended to gift 50% to his wife, in which case the exemption may not be available. So it is important that he says, although the property is owned legally along with the wife, and but the beneficial ownership continues to belong to him entirely, and payment has been made by him, as well as entire investment is reflected in his tax return. So that is one part of it. The second part of it is that it must be a long-term capital gain for you to claim exemption. So the previous house which you have sold in Jabalpur, it must have been held for at least 3 years. Only then you can get the exemption. And the final point was the extent of the investment. So as long as whatever is the capital gain, which I understand is 1 crore. I can't see how your tax can be 1 crore on a sale of 2.5 crores because if it's a long-term asset, the tax rate is 20%. So even if your cost was very nominal, you can't have a tax liability of more than 50 lakh rupees. So assuming that is a capital gain and not capital gains tax, what you are talking about, you need to invest the capital gain in the new house in Secunderabad. And as long as you do that, you have to invest within 2 years of the sale or 1 year before the sale. And if you are constructing, it has to be constructed within 3 years. Now, these are very important timelines which you need to follow. In case, one more point I would like to add, that in case you have not made the investment before the due date of filing the return, then you need to deposit this money in a special capital gains account, and from there you have to make investment. So you can't say that it is 3 years and therefore I'll make investment subsequently. If in the meantime you have to furnish your tax return, you need to deposit in a separate special capital gains account.
Right. Very quickly, Suresh, tell us one more thing. You mentioned beneficial ownership. Now, this is a word you used repeatedly. Does Trevor have to furnish any kind of documents to claim or to show this beneficial ownership to the tax authorities?
Yeah, so the simplest thing is now any person who is having, if it is more than 50 lakh rupees, then he has to reflect in the schedule of assets and liabilities. So if he reflects the investment in his tax return and the wife does not reflect because she is not the beneficial owner, that will establish. Another thing one can do is also to have they can do an internal MOU in which it can be clarified that although the legal ownership is joint, the beneficial ownership will be entirely in the name of the husband.
Right. So, Trevor, here are certain things that you need to do. One is, remember that it is not the capital gains tax that you have to reinvest. What you need to reinvest is a capital gains, which means the profit that you have made by selling that property. This is what you reinvest in another residential property. Secondly, yes, you can claim exemption. However, you need to, one, establish a paper trail. Second, ideally enter into an MOU with your wife saying that you are the beneficial owner of the property and that you will take the tax liability in this case. right?
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.